If you've been wondering about investing in space travel, you're not alone. We've seen billionaires from Elon Musk to Jeff Bezos betting on businesses that are out of this world, and billionaire Richard Branson has been doing the same. Now he's giving investors a chance to go along for the ride. Branson's space tourism venture, Virgin Galactic, will go public by the end of the year. Our next guest runs a venture capital firm focused on early-stage space companies and has been making the case for investing in space. Chad Anderson is the CEO of Space Angels, and he joins us now from the NASDAQ market site in Times Square with a little more perspective. Chad, first of all, the deal itself and how this is structured, basically cutting a deal to put this business into an existing publicly traded entity on the New York Stock Exchange. What was your reaction to that?
Yeah, I mean, it's certainly very big news today. So Virgin Galactic will be the first and only human spaceflight company that's publicly traded. And so it's really momentous in the sense that space has captured our imagination for the past 50 or 60 years, but it's really been inaccessible to most people. And so companies like SpaceX have lowered the barriers to entry and are enabling entrepreneurs to participate for the first time. Virgin Galactic and Blue Origin and others are making space more accessible by bringing the cost down and allowing more everyday people to experience spaceflight. And so space is becoming very much more accessible to the public, and I think that's where we're seeing a lot of excitement lately. Space Angels have been playing a leading role in this as well, helping private investors to get greater access to space companies. And then it seems like the deal that's been set up now is really these SPACs are set up in a way to give the public more access to participate in these space companies as well.
All right, and SPAC is just a sort of an industry term for basically a listing with no business behind it until somebody actually does a deal like this and puts a business behind the publicly traded entity. You talked about Blue Origin, which is Jeff Bezos' company. I would imagine that as the richest person in the world, he's in a position to keep his business private for a while. We've heard about Elon Musk seeing the benefits of keeping SpaceX private. For Richard Branson, who you can make the argument would have taken this company public sooner had he had a more smooth process towards that he would have taken them public. What is the difference with Branson?
Yeah, I mean, definitely much different approaches to fundraising, and this is a unique one, as I mentioned earlier. I mean, this will be the first time that we've seen this. What's really interesting to me is that if you look back to the 2000s, it was normal for companies just a couple of years into since they were formed to go public. And IPOs at the $50 to $100 million range were pretty standard back then, and things have changed quite a bit since then. Mostly what we're seeing today are mega valuation IPOs. We've seen a number of those this year already. And so the thesis behind these SPACs, as you mentioned earlier, it's a different approach to a non-traditional path to IPO. And the idea there is that because of these mega valuations, private investors have been capturing most of the value. And so the idea with this is to get the public involved earlier, to get them, give them the ability to participate and to participate in more of that upside. And so it's more akin to what we've seen in the 2000s, and it's very interesting from Virgin's perspective. And Chamath and Branson are both great salesmen in their respective industries, and so to capture the public sentiment, to get them involved, to get both of them behind the sales that are now increasing due to the success in their development plan and the fact that they're going to be launching commercially later this year or early next year, is all boding really well for a potentially really positive outcome for the company.
All right, and you mentioned Chamath. You're talking about Chamath Palihapitiya, who is Richard Branson's partner in this. It's his venture capital firm that is basically teaming up with Virgin Galactic, who's a fascinating story. A family moved to Canada when he was young from Sri Lanka, and he became a billionaire, early employee at Facebook, and has been looking to invest in the next big thing. For people who are going to be looking at this as a possible investment, investment, Virgin Galactic, when ultimately it is public, Chad. What do you have to keep in mind? I mean, sure, it's exciting. This is the first, standalone space tourism business that investors can, get a piece of, so to speak. But what's really important for investors to think about?
Yeah, I mean, a really positive signal is that Chamath's put in $100 million of his own money. So it didn't really surprise us that it was him that was involved in this, because Social Capital has been making some investments in space for a while now. But to get him to put in a significant amount of his own money into this bodes really well. It's a really strong positive signal for the company. We have gotten to this place of the mega valuation IPO and doing it only once you've reached a certain point in your life. There's a lot of pros to that and a lot of cons to that. And some of the pros are that you are able to get your company situated and be ready to handle the quarterly reporting cycle and the additional overhead and things that are involved with managing a public company and the public scrutiny. Virgin's actually been in the public eye for a long time. Human spaceflight is quite difficult, and they've had their setbacks, but they are not really going to be now thrust out into the public eye, whereas before they were, able to operate really privately. They've been doing things pretty publicly for a while, so I don't think that's going to be a big transition for them. I think what's going to be a bigger transition for the company is that it's gone from a very wealthy investor, backer who essentially controlled the company with one sovereign wealth fund as an investor, to now a very clean cap table to a publicly traded stock. And so we'll have to see. I don't think we've never seen a human spaceflight company operate on a quarterly timescale, and so certainly they've got a lot of momentum behind them, and so we'll just have to see if they're able to execute on a quarterly timescale and under the additional pressure.
Yeah, well, you mentioned this has been a long time coming. I remember interviewing Richard Branson for BNN when I was based in New York, and he was doing some of the early press for this business in the mid-2000s. Just a final question, Chad, because you've been on with us before talking about all the exciting activity here in Canada. Can you just give our viewers a taste of the kinds of investment opportunities that might surface tied to Canada's space industry? And we'll only have about 30 seconds left.
No, I mean, this increased access to space has not been lost on a lot of different countries, and Canada is very quickly becoming a key player in space if they weren't already. So we've now made 10 investments out of our new fund. I think 3 of them are Canadian. We're very bullish on the Canadian market. There's a lot of really interesting things happening across the country. We've been concentrated in Toronto and Montreal for the most part, but we've invested in satellite companies there doing a number of interesting things, and also on the data analytics side of the house, which they're building some very valuable companies in Toronto we're very excited about, and all of this is available and accessible due to the efforts of SpaceX and Virgin and companies like that.
Chad, great to get your perspective. Exciting day. Chad Anderson, CEO of Space Angels, joining us from the NASDAQ market side in Times Square.